All right. Hello, everybody. We're going to give it a minute for folks to hop in. So I've been invited to say hello and welcome you all. If you don't know me, I'm Marie Fang. I think I heard probably most of you maybe know me, but you may or may not know of Heard. So we're going to have an awesome webinar coming up. And when you're logging in, let me know in the chat if you'd like, where are you logging in from? Because there's people coming from all over. So just as we wait for people to come in, feel free to drop in the chat where you're coming in from, even just those of us who are already here, I know from all over. Oh my goodness, Rhode Island, Ventura County, Texas. Oh, we got a bunch of Texas. Look at you. Oh, Canada. Okay, Los Angeles. Oh, it's going so fast. I can't even keep up. I saw San Diego though, and I'm in San Diego. Hello, everyone. And today the webinar is going to be hosted by Heard, which I've been partnering with Heard now for, I can't even keep track of how many years. Maybe has it been a
At
thousand
least,
years? Maybe
yeah, it
not
could
quite.
be. It feels like 1,000.
Yeah,
At
it's
least
like three or
two.
four. Yeah,
Yeah.
yeah, Michael's been on board for at least two, and then I want to say it was like 2020 or
Yeah,
maybe
Marie, like literally,
2021.
I think it was like when we were, yeah, different world ages ago.
Yeah,
A
you had
century.
like
Yeah.
2 or 3 employees or something.
Yep.
Um, so Herd is kind of like the mothership of all things bookkeeping, accounting, taxes for therapists. And also one thing I really love about Herd is just how much free information you put out there and how great your free information is. So these webinars have always been super helpful. I know you're going to come away with a lot of takeaways, even if you already know your stuff. I always learn something new. So I'm excited for this webinar. And Michael, I wonder, should I hand it over to you, Michael, at this point?
Absolutely. We have a lot to cover in the next hour, so let's just dive right in. I don't think we've ever been called a mothership before, so we may have to
I don't know why I pulled
start
for that
using that.
word.
That's pretty cool. Love that angle. So thank you so much for the 167, 169 folks who are here. Continue to climb. We had over 1,300 therapists sign up for this webinar to learn about taxes and accounting on a Friday, not even during
Yay.
tax season, which is pretty amazing. So thank you so much for being here. If you're watching the recording, thank you so much for your time and your attention. We're now beyond tax day. April 15th has come and gone. What can you do to set yourself up for success in your practice for the rest of the year? That's what we're going to talk about today. Our goal is to deliver a ton of tactical tips and advice and information for you. So let's just dive right in. And also thank you, Dr. Marie and Private Practice Skills for hosting us.
Oh, it's a pleasure. Thank you so much for sharing your expertise.
So just a few housekeeping items before we jump in. We do have a large group today. So if you do have questions that come up during the next hour, please drop them in the Q&A. So in the bottom of your Zoom window, you'll see a Q&A with 2 little chat bubbles. Please drop questions there. If you do drop them in the chat, it'll just get lost. So if you drop them in the Q&A, we'll be able to respond. We'll stop throughout and really encourage you to ask lots of questions. There will be a recording that will be sent out. So if you have to drop off early, or if you're worried about taking notes, don't worry, we'll send you the recording today. Quick warm-up question here for the group. How did this past tax season go for you? Drop a 1 in the chat if you haven't filed your taxes yet, which is totally okay. Drop a 2 if it went okay. Drop a 3 if it was a breeze, you crushed it. All right, getting lots of 1s and 2s. Very normal. Our goal is next year, when we do the session again, you'll be at a 3. Quick introduction of Heard. Heard is an all-in-one financial solution for therapists in private practice. Dr. Marie mentioned this, but we help therapists manage their bookkeeping on a monthly basis, which we'll talk about today. We provide financial reports so you can see how your business is doing. We help you with your quarterly taxes, which we're going to get into, and we also help you file your annual taxes as well. If you need payroll, that's a service that we provide. So really, we operate as the financial back office for your business so you can focus on the work that you really want to be doing, which is helping your clients. We are very excited to be able to offer a discount for this specific workshop and the private practice skills community. If you are interested in joining Herd, we are offering 50% off your first 2 months, which is a $200 value, which is very exciting. Just use the code PPS when you sign up. We do offer free consultations and actually encourage you to schedule a free call with our team just to make sure that it's a good fit for you and your business. Melanie is here. She'll drop that link in the chat. If you pull out your phone, scan this QR code, we do have a limited number of spots that we're able to offer, unfortunately, per day. So they do fill up. So I encourage you to go ahead and grab one of those if you're interested in meeting with our team. And with that, I will turn it over to our co-founder and CEO, Andrew Riesen.
Awesome. Thank you, Michael. Thank you, Marie, for having us and for the century that we've worked together. It's been very fun. Always grateful for the partnership and specifically for everything that you do to support early stage clinicians and growing their practice and building their practice as well. I am Andrew. I am also the person on this slide that needs a new professional headshot. So if anybody knows a good place to get one of those, do let me know. I am the co-founder and CEO at Herd alongside my amazing co-founder, Victoria, who handles all things engineering, product, and design. I am a lifelong accountant that has been trying to escape accounting for a lifelong period of time. I started my career working with independent physicians at a wealth management firm and group practices. I worked for PricewaterhouseCoopers, the world's largest public accounting firm, to where we worked with small to medium-sized businesses on things like bookkeeping and taxes. I built a tax software business, and then I decided that I wanted to marry two of my greatest passions, working in mental health and building accounting software, and so here we are. I am the husband to a recently licensed clinical psychologist. I'm very proud of her. And by proxy of her being in a PhD program for a seemingly never-ending period of time. Maybe she's not out yet. I don't know. Yeah, shout out to Natasha. Many of my best friends are clinical psychologists. And so one of the reasons that we started Herd in the first place was as many of them transitioned out of the program into a clinical setting, all of them were wondering, oh my gosh, how the heck do we do all this business stuff on top of being a clinician? And a lot of this stuff is really scary. And so Victoria and I, in the early days, when Marie mentioned we were 2 to 3 people, spent a lot of time manually setting everybody up and helping them become business owners. And so I am deeply passionate about this work. I am grateful, as Mike said, that there's 200 people here on a Friday to listen to somebody talk about accounting. I promise I will try to make it as fun as I possibly can. And as a party note before we jump in, mental health is just something that's incredibly important to me. I've dealt with anxiety, panic disorder, depression since I can ever remember. And I've been in the therapy office on the other side of the room for about 15 years. And so my life has been deeply impacted by the work that you do. So grateful to you all. And let's do it. Let's have fun. Okay, cool. Lots of things to dive through here. We'll talk about wrapping up last year's taxes. I saw in the chat that somebody's still working on it. That is totally fine. I am sorry to our friend in the chat that is waiting on their accountant. That's no fun. We'll talk about how to set up your business finances, how to build the financial infrastructure to set you up for success in your practice. What is a business entity? What is a tax designation? What should I be? Do I need an LLC? We'll dive into all of that good stuff. We'll talk about this concept of bookkeeping, and I'll use lots of buzzwords, but we'll try to use simple words to describe each of these things as we go through them. And then we'll talk about everybody's favorite topics, taxes, both on a quarterly and an annual basis. And hopefully you're able to leave with some nuggets on how you can save some money as you head into the next tax season. But before we jump in, one thing that I want to reiterate, please add all of your questions into the chat, add all of your questions into the QA. Our goal here today is not that you leave here as an expert in all things accounting. As Marie mentioned, maybe there are some experts in accounting on the call. If you are here and you are an expert, I love that. If you are not an expert, if you're a clinician, whether you're in the early stage or you've been at it for a while, and you come out of this conversation having learned one new thing, maybe a new tax savings opportunity or a new question that you can go back and do a little bit more research on, I would consider that a big success. So let's have fun.
Great. And then another just quick housekeeping item. If you go to the Q&A, you can drop a question in. You can also upvote other questions. So if someone has a question that you're also interested in, definitely hit that thumbs up so that when we stop throughout to answer questions, we'll make sure to get to it.
And if you have a question, chances are somebody else probably has that same question as well and are going to be very grateful that you took the risk to ask that question. No silly questions. Okay, wrapping up last year's taxes. If you haven't filed your 2023 tax return yet, 100% you should be doing your best to get it in as soon as you possibly can. But to our friend in the chat that shared that, and I'm sure other folks in the chat that didn't actually share that, it is okay to file an extension. It's a normal part of the tax filing process. Many folks do file extension just to get a little bit of additional time to make sure that they're able to get all the forms that they need, to make sure that they're able to review their tax return. The risk of filing an extension without filing a payment with the extension is that you can get failure to file penalties. And so if you do determine that you need to file an extension, just make sure that you make the payments against your annual tax liability as well. That's very important. When you are unable to make that payment, that is when the penalties and interest starts to accrue. Also, if you're unable to pay your 2023 tax liability, that is totally fine. The IRS has a payment plan to help you avoid failure to pay penalties and interest. And so there are paths forward.
Surprise pop quiz. Do you have a separate bank account set up for your business? Drop a 1 in the chat if yes, a 2 if no. There's no wrong answer here. We're seeing a lot of 1s, a few 2s. Andrew, could you share what's best practice?
I will do my best to share what is the best practice. Okay, goal here is to avoid commingling your finances. And so I do lots and lots of these presentations. And if you've been to a presentation before, awesome, welcome back. But you will know the thing that I love to say is at Herd and the good financial system, the thing that we love most is a separation of church and state when it comes to our finances. It does not need to be complicated, and I will talk through more tactically what that can look like for you in the next slide. But TLDR, for your business, whether you're a sole prop, whether you're an LLC, whether you're a professional corporation or a C Corp or an S Corp, open a separate business bank account. This helps you keep your personal and business finances separate, which is absolutely critical for clean bookkeeping. There's nothing that makes coming to tax season harder or more frustrating for your tax accountant at the end of the year than having a commingled account. And the importance of separating your business and personal finances is that when you get to the end of the year, you're going to have a good sense of what is business, what are the opportunities, what are the things that I can take advantage of. And so in the next slide, we'll dive in and talk through how to set that up and how to think about the flow of money between those accounts. Cool. So let's imagine Michael's therapy practice. He's a sole proprietor. He just got started. He was reading all of Marie's materials and he's like, oh my gosh, I feel confident. I'm ready to get out on my own. Let's do this thing. He started seeing 5 clients on the side. Michael was like, you know what? I'm going to be a commingler. And then he came and he talked to me. He's like, Andrew, what should I do? And what I told him is that, hey, it's totally fine. You don't need to set up you don't need to get a tax ID. You can operate with your SSN. You don't need to form a formal business entity. That is okay. Keeping it simple when you have a small part-time private practice on a side totally makes sense. But what is going to make it a lot easier for you when you go to file your tax return at the end of the year is that even in your personal checking account, set up a separate personal checking account and set up a separate personal savings account. What this will allow you to do is to have all of the income from those 5 clients flowing through that separate checking account. So for your practice, all of the expenses that you're paying for flowing through that account. So think of things like simple practice, or maybe you use therapy notes, your insurance through the trust or CPH, your email provider, you're a part of memberships, you pay for CEUs. all of those expenses, we'll talk through some of those different types of tax deductions or business expenses you might run through. But the good thing that this allows you to do when you then have a separate savings account is you start to get a sense of how much money you're making on a month-over-month basis, what the surplus of that money is, and we'll talk about how to track that income and those expenses more tactically from a bookkeeping standpoint. But the separate savings account allows you to set aside a percentage of your money for taxes. And there's no more important thing to do than to have that money set aside for taxes when it comes to quarterly taxes and annual taxes, because you do not want to get to the end of the year and find out that you have a big tax bill or big outstanding tax liability and you haven't set aside enough money. There is nothing scarier. We've seen it with a lot of folks that are new to practice, that are joining Herd for the first time, and it's something that doesn't feel super good. But if you do have a formal business entity or you have a tax ID, let's say you're a sole proprietor and you just want to get a tax ID to get a service of process set up and separate your personal from your business, in that case, I would recommend to get a separate business checking and a separate business savings account. Again, same purpose. All of the income flows into the checking, all of the expenses flow out of the checking, and then you're setting aside money in that savings account. Again, quarterly taxes and annual taxes, your tax liability, this is on a personal basis. And so this is a personal expense that you're paying for. And so it is not a business expense. And so theoretically, you should be paying those taxes out of your personal account. And so even if you have a business savings, transfer it to your personal account first and make that payment from there.
Getting a few questions here, just a few points of clarification. So tax ID, what does that mean? So a social security number, an SSN, is a tax ID. If you operate as a sole proprietor, you can just use your social security number. Some people, they don't want to put their social security out there in the world, so they get what's called an EIN, right, which is an employer identification number. So if you form a business entity, which we're going to talk about, you'll get an EIN, or you can apply for an EIN. You can also apply for an EIN as a sole proprietor. So that's really like just a optional thing. Like, you don't need to do that. So there's a question here: is there a difference between an EIN and a tax ID? Those are the same. Interesting question here. If I have multiple businesses, so say I have a therapy business and a coaching business, would you recommend that I have separate bank accounts for each business?
Yeah, just to build on the tax identification point, think of it this way. So tax identification at the top of this tree that we have here, and below that is social security number and EIN. And so social security number, that can be your tax identification if you are a sole proprietor. An EIN would be something that you would get if you have a formal business entity. You can also get an EIN or a tax ID as a sole proprietor, as Michael said, if you want to separate personal from business. Okay, Michael, remind me, the question was...
Oh, if you have multiple businesses, do you need multiple bank accounts?
Great. Okay, so on this question, I do want to caveat, I am not a legal professional. I have just happened to have seen thousands and thousands of therapists who have gone through this process. So sharing from experience, always consult a legal professional. I'm here to caveat all things that I say today. My recommendation here is every state approaches this differently. Every licensure type approaches this differently. There's a different level of rigor at which each state and licensure type might approach the importance of separating these two types of businesses. And so my recommendation would be to start with your licensure board at the state level, have a conversation with them, let them know the type of work that you're doing. Hey, I have a therapy practice, I'm doing clinical work, and then I also opened a coaching practice. Is your recommendation? Most of these licensure boards have legal professionals, and so chat with them and say, hey, is your recommendation that I separate these two things? Buy and whole, kind of meta an overarching theme that I would recommend is when it is a coaching practice and a therapy practice, I would recommend separating those two different things. And why that is because the clinical work that you're doing is 100% going to be within licensure, or you will be operating as a licensed professional. That may not be the same case for coaches. And so important to distinguish between the two from a marketing standpoint.
I want to move us along here, but we're getting a few questions about paying taxes from a business bank account versus a personal bank account. Remember, taxes are a personal expense, is something you are paying as an individual and as a taxpayer. So when you pay your taxes, whether it's your quarterly taxes or your taxes at the end of the year, that should be ideally from a personal bank account, because it's not technically a business expense. It's not an expense against your business that's lowering your profit for your business, right? It's just an expense. It's you're paying that as a taxpayer. So best practice there is pay from a personal account.
Limited risk of paying from your business savings account, but the reason that you want to pay from your personal account is if you have a legal business entity set up, like an LLC, and we'll talk about this a little bit later, but there's a concept of what is called the corporate veil. And so a lot of people will set up a legal business entity to protect and separate their business from their personal assets. And to the extent that there is crossover between business and personal assets, it is a concept of piercing the corporate veil, which potentially puts your personal assets at risk if there were ever to be litigation that takes place, and we don't want that to happen. So when you are a formal business, plan to pay from your personal account.
Another question. Do you have a business entity set up for your practice? So a business entity being an LLC, a PLLC, a professional corporation, maybe a partnership. Have you formed a business entity for your business? Drop a 1 in the chat if yes, 2 if no. Getting a lot of 1s and 2s here.
I'm curious, Marie, before we jump into this one, what was your process of setting up a business entity like for your practice? Is that something that you did early on, or did you wait a couple years, or how did you think about doing that?
I'm still in the 2 camp. I put it in. I'm so part-time. So I have my private practice skills as an LLC. And so I've done that. Like you said, keeping those 2 business, my therapy practice and private practice skills are very different businesses. But for my therapy practice, I see 6 clients a week right now. So I'm hanging out in sole proprietor land. I'm open to your recommendation though, if you think I should shift it.
No, I love that. And the thing that I always like to tell folks is, especially early on, or if they're running a part-time private practice, people feel a lot of pressure like, oh, I heard in this Facebook group or this listserv, like I should be setting up a business entity. If you are a small part-time private practice like that, keep it as simple as you possibly can. And so in Marie's case, just having a sole proprietor is the easiest and probably most straightforward way for you to approach that work. And so that makes total sense. Awesome. Good lead into this one, establishing a business entity. If you are starting to see clients by default, so let's imagine Marie, when she was just getting started in the early days, started to see 3 or 4 clients on the side. She did nothing else. She didn't register with the state. She didn't set up a new formal business entity. She didn't do anything with the IRS. By default, she is going to be treated as a sole proprietor. There are certainly legal benefits to establishing a formal business entity. Again, I talked about this concept of the corporate veil of protecting your business assets from your personal assets and having that separation of church and state. But the reality is, as a licensed clinician, you also need professional liability insurance, malpractice insurance, different types of insurance that a traditional LLC just isn't going to cover in totality for a licensed professional. And so always have a conversation. Again, my best recommendation around what type of business entity to set up, start with your communities, talk to your licensure board, and then at that point, you can talk to the Secretary of State as well. They will be really helpful. My feedback is always avoid talking to lawyers until you need to talk to lawyers and you've done a little bit of understanding. Those fees can add up and get really costly. And there's a number of different paths you can take before I'd recommend having that conversation. But when you go to set up a formal business entity, certainly work with a legal professional or use a service if your state, enables an easy path forward to do that. Of course, there may also be tax benefits if you elect to be taxed as an S Corp. This is a potential rabbit hole. And so I will pause on this, but we can certainly dive into what it means to be an S Corp, why you might think about becoming one. I know it is one of the sexiest topics in the world of accounting for therapists. And so happy to create the space for that if that's something that's important to you all.
Yeah, I think it's covered on this next slide as well, so we can do a brief overview. But I agree, we could do a whole webinar if there's interest from the community just on S Corps in particular, but we could review it at a high level for sure.
This is the magnus opum of Michael and I's presentation. What we're most excited about, our decision tree. No, all jokes aside, we've been working on trying to figure out how to best take people through the pathway of understanding what type of business entity that they should be. So let me walk you through this. Do you want to limit your personal liability? That means, do you want your personal assets to not be at risk? It sounds kind of silly to say that because in most cases it's a very, very limited risk, but this is how we will start this decision-making tree. If the answer to that question is no, then you can simply operate as a sole proprietor. Again, very, very low risk. I do not want to be fright shaming people here for operating as a sole proprietor. I believe in many, many cases, it makes sense to operate as a sole proprietor, and it's the best and most simple path for small private practices. But if you do want to limit your personal liability and you have multiple owners, you would set up what is called a partnership. You would be responsible for filing a separate business tax return at the end of the year. It's called a Form 1065, a partnership tax return. You would be taxed as a disregarded entity, though, on an individual level, meaning that you'd still pay self-employment tax. Do you have multiple owners in your practice and you want to limit personal liability? Yes, or no, rather, and you're in California, then you would set up a professional corporation. But if you're not in California, in most cases, you would set up an LLC or a PLLC. New York being a great example of that. In New York, you have to set up a PLLC. Every state, I want to reiterate, forming a business entity can be really, really cumbersome and challenging. New York being a great example of that. Michael and I were just talking last week about how you have to, what is it, Mike? You have to post in like 5 different local newspapers in the state of California to like announce that you're becoming a PLLC, and then there's stuff that you have to do with the health board, and so
Yeah.
there's a lot that goes into it.
Yeah, definitely.
Oh, yeah, I was going to say, but have a conversation, get a sense of what it takes. And that can, again, start at the licensure board. You can talk to other folks in your state that have gone through that process, and they will oftentimes be a great place to start to understand what type of business entity that you should be. So from an S Corp standpoint, if you are making more than 60K in profit, oftentimes it makes sense to explore, hey, do I want to become an S corporation? Because there can be significant tax savings, and those tax savings come in the form of self-employment tax savings because you are separating yourself as the owner and the employee of your practice. And what that means is, as an S corporation, you're responsible for paying yourself a reasonable salary. And so you make money, you have expenses, and then you have your payroll or the expenses associated with paying yourself, and then you have money that's left over. The money that's left over in your practice is taxed differently. You're no longer responsible for paying that additional 15.3% of self-employment tax. So for our friend Mike and Michael's therapy practice in Providence, Rhode Island, he would only be responsible for paying federal and state income tax and no longer the self-employment tax. And so the savings in becoming an S Corp comes from reducing the overall amount of self-employment tax that you are paying. If you are not making more than 70 or 60K in profit, my recommendation, again, as I alluded to above, would just be to operate as a sole proprietor. You can certainly get a separate tax ID. You can get a local business license and do all the things to set up a business as a sole proprietor, but it's important to not create additional admin burden in the case that you are not yet ready to become an S corporation, because there is additional costs associated with being an S corp. One thing to note specifically is that in California and New York, as 2 specific examples here, I would change that threshold of $60,000 to about $100,000. You're responsible for paying additional taxes to the franchise tax board. There's annual franchise tax assessed against these businesses. New York, as an example, they have a city tax that's assessed against or levied against S corporations. And so get a good sense. If you're going to become an S corp, definitely talk to professionals. We at Herd love to help assess this process. And one of the things that's most important to us in this process is that you understand all the individual changes that will come, not just the tax savings, right? Because when you become an S corp, you are setting up payroll, you have a separate tax return, your accounting responsibilities really shift, and that will change how you operate as a small business owner and a clinician.
Couple points of clarification, questions coming in. So when Andrew says in profit here, that is your income after all of your expenses, right? So if you made $80,000 in income, but you had $20,000 in expenses, your profit would be $60,000. This is also called your net income, also called your taxable income. Accountants like to have multiple words that all mean the same thing, which is confusing. And then just a quick clarification. So if you are in California, as we mentioned here, just because California likes to be different and complicated, you can't have an LLC or PLLC. So you form what's called a professional corporation, and then you elect for your professional corporation to be taxed as an S corporation. So just to be super clear, the professional corporation, that's the business entity. The S corporation, even though it is called a corporation, it's not an entity. It's a tax designation. So I don't know why that is. It is what it is. So an S corporation, just if you take something away from this, S corporation is how you're taxed. You're taxed as a sole proprietor or an S corporation.
Some good questions coming through the chat as well. That's important clarification, and I'm glad that you jumped in on that, Mike. Yvonne, I think I'm saying your name correctly. I apologize if I did not. I have an LLC for my business. Can I switch to a sole proprietor? And so this is a good opportunity to build on what Mike is saying as well. Right here in this moment, on the left-hand side, we are talking about different types of, oh, you can't see what my arrow is doing. If we're talking about this tree on the left-hand side, yep, we are talking about business entities in that regard. If we're talking about the 60K in profit and S corporation versus sole proprietor on the right-hand side, we are talking about how you are going to be taxed or how you are going to be filing your tax return at the end of the year. And so, Yvonne, the question on how do I change my LLC to a sole proprietorship? By default, an LLC, a PLLC, a sole proprietorship, they're going to be taxed as a disregarded entity, which means that they're going to be taxed as a sole proprietor would, meaning that you're going to have federal income tax, depending on the state that you live in, state income tax rather, and also self-employment tax. Only if you elect to be taxed as an S corporation, if you get to a point in time where it makes sense, would you be taxed as an S corporation? And so an important distinguishing factor here is that even if you form an LLC or a PLLC, you are not going to have a separate business tax return. You are going to file as a sole proprietor, which means that you'll have a simple profit and loss or a Schedule C on your individual tax return at the end of the year. And so think about it this way, an LLC, a PLLC, a sole proprietor, they're all synonymous unless you elect to be taxed otherwise. And I'm really glad that you asked that question because I could see how that would be confusing.
Great. Keep the questions coming. I'm going to move us along here. Oh, another surprise poll. How do you track income and expenses for your business? Drop a 1 in the chat if you look at your bank statements. Drop a 2 in the chat if you're using a spreadsheet to track your income and expenses. Drop a 3 if you're using accounting software like QuickBooks. And drop a 4 in the chat if you have a bookkeeper. Great. Good mix here. It's going really fast. I honestly can't even keep up. I think a lot of 3s and 1s and 2s. So good range. Very interesting.
Cool. Tracking income and expenses. Bookkeeping is the foundation of any healthy business. I like to say that the bookkeeping for any business is kind of like the heartbeat of the business and how everything else flows around. Without great bookkeeping, it's hard to have a healthy business. And so what bookkeeping means, though, on a very, very simple basis, is the process of tracking the money that is coming into your business, the income. This could be from client sessions, it could be from supervision, it could be from consulting, or it could be from work like Marie does of creating courses and educational opportunities for other providers. But also the money going out and the expenses that are coming out. So all of the things that you pay for to operate as a clinician or as an entrepreneur that are coming out of your business. The goal of good bookkeeping is to ensure that all of the data on your business is complete and accurate, And so whether you use a simple spreadsheet, whether you use a paper ledger like my mother or a checkbook that she's doing on a week-over-week basis, I've tried to help her, but it's okay. Or you're using software, you're working with a bookkeeper. There are different approaches that are, I would say, best practices for different stages of where you are at. And there is no right answer to how you approach this. I want to say, as I talk about different possibilities or different opportunities of how you might approach this, that there's no right answer. And my goal is to help educate you and help you understand there are different ways that you can approach this that'll give you better information to help you make decisions around how to pay yourself, how to set aside money for taxes, how to budget, how to plan. And so that is the goal of this section. Again, there is no right answer or right approach to how to do this. Awesome. And so the way that I like to think about this and the way that I like to think about the best practices is if you have a side practice or a small part-time practice and you're earning less than 10K, don't call me out like that, Mike, less than 10K per year in your practice. And so let's imagine Michael's therapy practice. He has, 5 clients that he's seen. My recommendation, you can certainly still set up the separate account, set up the separate financial accounts, but you can probably track this information in a spreadsheet. If you do have separate accounts, you could set up, very cheap QuickBooks Self-Employed, or you could set up something like Wave, albeit I don't think they work with health professionals anymore. But setting up a separate spreadsheet, keeping track of all of the income, keeping track of all of the expenses, looking at your profit on a month-over-month basis of what is left over after those expenses, getting intimately acquainted with the finances, and then using something like TurboTax at the end of the year. Let's imagine that you are married filing jointly, your partner has a W-2, and then you have this small part-time practice on the side. In 9 out of 10 cases, working with a professional or working with a tax preparer, it's not going to save you additional money. And for the amount of money that you would pay to work with a tax preparer, it probably won't save you additional money. And so, as an example, when you're working with, or if you come to Herd and you are coming to Herd for a consultation, what we're going to tell you is we are so excited that you came to us and want to work with us, but we don't think that it's in your best interest to work with us. Here are some opportunities. And then Michael and Melanie and their marketing team has put together a ton of resources for folks that they can leverage, budgets, spreadsheets, and all of that good stuff. Building a full-time private practice. So let's say you're less than 50K per year in practice. My recommendation at this point, really lean into that separation of church and state. So you have your separate business accounts and you're starting to set up software. So maybe you're using QuickBooks Self-Employed. Maybe you're using Xero. I don't know. There's lots of accounting software solutions for kind of DIY, do it yourself out there, but get that software connected to your financial accounts and then take those financial accounts to a tax preparer at the end of the year. You certainly could spend time categorizing all of the income and expenses throughout the year and reconciling it and doing that great bookkeeping work. That would be best practices, making sure that everything is complete and accurate. Some of it might be overwhelming. Oftentimes when folks jump into QuickBooks, even for accountants like myself, QuickBooks can be confusing, but centralizing it into one place can be really, really helpful when you do go to work with a tax preparer at the end of the year. And once you start to make a little bit more money as a self-employed individual, oftentimes tax preparers are going to be able to find opportunities for you for additional tax savings or potential optimizations. Full-time private practice. And so let's imagine you're earning over 50K in a year. Your practice is really starting to rock. That's where something like Herd would make a lot of sense. And we have software, so amazing software that our incredibly talented engineering team has built. And we also have full service accounting support as well. So you get a dedicated bookkeeper, you have a dedicated CPA that you work with at the end of the year, and we have a team of accountants on the back end that you can message throughout the year as well. At that point in time, when you're looking at your schedule and you say, okay, I have 15 to 20 client sessions a week, each client session is $150. If I can get an hour back every month, or if I can reduce the amount of anxiety as a business owner and hand off some of this stuff, or just know that I have additional support to help make decisions throughout the year, to get better clarity on decision making, is there an area where I can save money? Is there an additional deduction that I didn't think of? What are other therapists doing? That's the point where it really makes sense to start thinking about it. Again, I say all of this, and one of my best friends, Trent, makes $250,000 in his clinical practice, and he loves to do his accounting himself and file his taxes at the end of the year. And so, if that is you and you like to do it and you love to nerd out on accounting, like, you know, people like me, that is totally fine as well.
Getting a lot of positive feedback about this slide in the chat, so that's good. Melanie dropped a link to our resource hub. So if you are in this, under 10,000 group here, maybe you're just starting or, have a small private practice, definitely check out the free resources that we have available at joinherd.com. Another surprise question. Do you pay quarterly taxes? This is a hot topic. Drop a 1 if yes, 2 if no. Also drop a 3 if sometimes, inconsistently. Great, good mix of 1s and 2s. Great, let's talk about quarterly taxes. Ooh, new flowchart alert.
Oh, okay, Mike. Nice. I did not see this one before we jumped in.
Oh, surprise.
We will navigate. This is a great surprise. Just like how you're surprised at every poll that you've put in here. Ooh, surprise poll. Okay. Will you owe more than a stop? Will you owe more than $1,000 or more in taxes for 2024? Yes, you must make estimated tax payments. No, you are not required to pay estimated taxes. Okay, taking a step back from this. As a self-employed individual, you are no longer using it. You may have a W-2 still, but when you become self-employed, you're earning money. Again, maybe you may be an independent contractor, maybe you're a 1099 for an agency or working with something like, Lyra or Headway or Alma or something like that. Or you just have a private practice and you're seeing cash pay clients and you're billing through Simple Practice or Ivy Pay or something like that, right? At that point, you're considered self-employed. And at that point, you're no longer having taxes withheld throughout the year. And so at that point, you then become responsible for paying Aunt Sam into those taxes throughout the year because she is saying, hey, I need to make sure that I have my taxes because when you had a W-2, you were paying me all these taxes throughout the year, and we use all of these taxes to invest in social programs and all of these other many things that the government spends money on. And so self-employment taxes and the taxes you pay when you become self-employed, rather, at the point that you're earning typically about $4,000 or about $5,000 is typically the point where you probably cross that threshold of $1,000 and eclipse this point to where you might be responsible for making quarterly tax payments. And so again, at about $4,000 or $5,000 of total earnings, this means the total amount of money that you've earned from a profit standpoint after your taxes. So remember what Mike said, the taxable income that's left over after expenses. At that point in time, that would be when you need to start thinking about quarterly estimated tax payments. There are certainly calculators online. Herd will always help you calculate these quarterly estimates on a quarter-over-quarter basis as your practice grows. A number of different ways that you can approach it, but my big recommendation is that if you're moving into practice for the first time, you expect to have a bigger year. So if you expect to be kind of in that growing a full-time private practice, and you're not just in this small part-time private practice camp, have a conversation with a professional or do a little bit of research on your side and get a good sense of how much that might be or how you might think about setting aside money for taxes, just so you don't get a big surprise at the end of the year. Cool. Okay. Estimating quarterly tax payments. Yvonne, great question. I will allude to that a little bit lower, but you will receive money back at the end of the year. And so estimated tax payments are estimates against your future tax liability. And so if you estimate over and pay in too much, then you will get the amount of money back at the end of the year. And so theoretically, if you're making estimated payments throughout the year, when you get to filing taxes at the end of the year, it'll be plus or minus just a few. You're not just going to have a big surprising outstanding liability at the end of the year. And so again, if you expect to owe $1,000 or more in annual taxes against your self-employment income, then you're required to make quarterly estimated tax payments. If you don't, You may pay an underpayment penalty when you file. The line in the sand for that is if you do not pay 90% of your prior year tax liability or 100% of your current estimated year tax liability, you will be subject to penalties and fees. And so get a good sense of what that looks like for you. You can do that by looking at your prior year tax return. You can do that by talking to a professional. And again, we have lots of resources on how to think about things like safe harbor estimates and quarterly tax estimates on our resources hub on the website as well, if you feel like you just want to tackle that on your own. Best practice is to set aside 30 to 40% of business profit for your taxes, but it totally depends on your unique situation. And so I'm always wary of just providing a general proxy of how much to set aside for taxes, because let's look at a potential example for Michael's therapy practice that has just been completely evolving throughout our entire conversation. So Michael is running his therapy practice out of California. He's earning $100,000 in his practice. He is filing solo or filing single. So he's absolutely rocking in his practice. He's probably looking at about between a federal, a state and a self-employment tax rate, about 35%, right? But then Mike's partner, because now he is married in the same situation, is earning $500,000. She is absolutely rocking it in her business. Very quickly, Michael's estimated tax rate or the amount that, or effective tax rate amount he's responsible for setting aside can go up substantially. And so it could go up from 30 or 35% to 50% or beyond very quickly. And so get a good sense of what it looks like for you on an individual basis. What is that full financial picture? And so when you think about estimated taxes, think to yourself, okay, what is the full financial picture, not just my private practice? Because the full financial picture is what is going to influence what your estimated tax rate is.
Andrew, you said something very important that I just want to reiterate. So when it comes to paying quarterly taxes, there's this thing called the safe harbor method. And what that method is if you make estimated payments quarterly that equal to your tax liability from the previous tax year. So if you look at last year's tax return, see how much you paid, divide that number by 4, and just pay that, you're going to be covered. You're not going to get charged an underpayment penalty. Depending on how much you made last year, you might still owe money when you go to file your taxes, but you're not going to be charged an underpayment penalty. If you make estimated payments that are equal to 90% of what your taxable is this year, you're also covered. But it's sort of hard, right, to project, like, I don't know how much money I'm going to make this year. It's more of a guess. So there's actually like a data point from the previous tax year that you can use. So I think that's a super helpful, just like grounding point here for folks to take away. Like if you're not sure about quarterly taxes, like just pay in what you paid last year and then you're going to be covered.
I'm curious as well, Marie, this is a good time to ask you. I know you have a small part-time practice on the side as you've grown your business, but at a certain point you had probably a full practice. How did you think about quarterly estimates? How did you approach that at the beginning? Did you work with a professional? Did you try to figure it out on your own? What did that look like for you?
Oh gosh. Well, the long and short answer is I have a husband who's really interested in doing the DIY route, even though it's not what his career choice is. But what I do appreciate is because expenses were so low at the beginning, and income is so low, everything's just a couple things every month. It was much easier to keep track. And he has a formula. I use the same spreadsheet, like a spreadsheet plugged in with the formula. It's pulled aside this much for, and then you drop this in the 401k. I just plug it in and then it has a number at the bottom, and then that number I add up every quarter and give it to quarterly taxes. So that's probably the incorrect answer, but I'm hearing that it could be way more simpler than whatever the heck we're doing.
No, I love that your husband has built the spreadsheet. There are the few, the proud, like myself as well, that loves to be a nerd and get into the spreadsheet as well. And it sounds like the perfect approach for, yeah, where you're at in your practice. And Raymond as well, it sounds like you take a similar approach. That's awesome.
Great. We cover this one, just upcoming deadlines.
Yes, upcoming deadlines, okay. June 17th.
Monday.
Yes, Monday. Get excited. the next quarterly tax filing deadline, September 16th. And so basically taking a step back, what we're looking at here, we have 4 quarters throughout the year from a tax standpoint that you're responsible for paying quarterly estimated taxes. April 15th is the first deadline for the year. June 15th is the second deadline for the year. It always, if it falls on the weekend, it'll always be the first Monday after that. So the 17th and the 16th that you're seeing here is just a reflection of one day being a Saturday, one day being a Sunday. September for the third quarter estimate, and then January for the fourth quarter estimate as well. And Mike, I recognize from a time standpoint, we got about 8 minutes left. So
Yep.
why don't we jump to the last, let's roll through the
final surprise poll. We can't
Okay.
skip. This is more of a quiz. So can you write off unpaid sessions? So if you have a session, client doesn't pay you, or insurance doesn't reimburse you, can you write it off? Drop a 1 in the chat if you think yes, or 2 if no. Correct answer here is no. Unfortunately, you cannot write off unpaid sessions. That would be nice. Let's talk about tax deductions.
Awesome. Mike, why don't we, I'll talk over this on the next slide, but why don't we jump to the fun stuff?
Great.
Awesome. So I saw some chatter coming through on tax deductions. We are getting excited about this. Common tax deductions for therapists. So what is a tax deduction? A tax deduction is a business expense that is considered deductible in the eyes of the IRS. And what that means is that it is ordinary and necessary in the course of your business. And so you're like, Andrew, great, you're using lots of very generic words to describe what a business expense is. The reality is, similar to how you have frameworks and approaches for how you deliver care, and you probably exist within and without in certain different points in time, it's very similar from a tax codification standpoint. So if you were to go to the IRS website, if you had lost your mind like me and reading through all of the codification and guidance to get an understanding of what's deductible, what's not deductible, what you would find out is, hey, there's a lot of gray area here. And when it comes to business expenses, you can take a conservative approach all the way to an aggressive approach. The thing that matters the most is documentation and the why behind your business expense. There are certain things that are like outright, this is not a business expense, but then there are other areas where, hey, this is pretty gray. As long as I make sure that I have good supporting guidance as to how I want to approach this deduction in the case of an audit, I might be able to take this deduction. And so I wanted to talk through a couple common tax deductions, and I know there were questions as well, so feel free to dump them into the chat. Advertising and marketing as an example, you probably pay for Psychology Today, you probably pay for good therapy, you probably pay to be a part of networks and membership groups. Maybe you paid for a new headshot. Alluding back to the beginning, I need to pay for a new headshot, so give me a shout out as to where I need to go. You probably paid to update a website. There's a lot that you do. Maybe you're paying for Google ads. Maybe you're paying for Bing ads or Facebook ads. Maybe you're paying for social media support. There's lots of things that we do to help market and to grow our practice. These are all things that we should take advantage of. Business meals, during the pandemic for a period of, I think it was 2020 to 2023, 100% of business meals were deductible, now 50%. And so if Mike and I are going to chat shop to talk about opening a new practice, to talk about collaborating, or if he's providing me supervision or case con, anytime that you are going and meeting with one of your colleagues, document that, and both of you should split the cost of that meal and take it as a business meal deduction. Again, for things like business meals, vehicle use for business, and sorry, I just had some jump on my screen. Business meals, vehicle use for business, and travel expenses. These are areas that get a little bit more scrutiny in the eyes of the IRS. And so remember that conservative to aggressive scale. Those are areas when you see expenses go up a little bit too high that the IRS comes and says, hey, like, what are those? Like that trip that you took to Tulum, that was a self-healing retreat. What was that, Michael? What was that? Is that actually a business expense? And so it might actually have been a business expense. And so Michael's meditation retreat to Tulum could have actually been a part of the type of clinical work that he provides, but what he would need to do in that case is be very clear as to what the business purpose was and have very strong documentation, receipts, brochures, whatever it might be. Vehicle use for business, again, this is one that they look at with greater scrutiny. Take advantage of the mileage portion of this. And so if you are going from your home office or your place of work to a place of business, let's say you're doing an adjunct spot, or you're doing a speaking spot, or you're going to do an exposure with one of your clients. Great example of business travel and a point in time that you might use mileage. I personally am fairly hard pressed for most telehealth-based clinicians to justify the concept of purchasing a vehicle underneath your business. And I think it would be probably pretty challenging in the eyes of the IRS as well. Again, I always provide this example. One of our early clients actually ran a therapy practice out of a van. And in that case, there's a pretty legitimate justification. I'm not going to opine on the efficacy of a therapy practice being ran out of a van, but that in that case, you may be able to justify the cost of that van. Membership fees, continuing education, software, of course, office supplies, this big light that I use in my presentation, my camera, my microphone, my little Buddha head right here, and all my candles, all of the things that you do to spruce up your space. You are a telehealth-based clinician, and most of the folks are on this call. If you are investing in the space that you're operating in to deliver the care, to legitimize the care that you're providing, and to deliver a space that feels comfortable to clients, you are making an investment in your practice. So take advantage of that and write off those expenses. Another one that folks often ask about, the home office deduction. Andrew, I'm a telehealth-based therapist. What does it mean for me to do a home office deduction or a home office write-off? Let's imagine my office that I'm in, which is now soon to be a baby room / workout room / all of the above, all of the things. Let's imagine it's just for work and it's 25% of my house. I pay $1,000 on a monthly basis, whether it's in a mortgage or whether it's in rental expenses, plus all of those indirect expenses. I would multiply, it's called on a pro rata basis or an allocated basis, 25% times that $1,000, and then you'd add up that expense over the course of the year to get back to what that home office deduction is. And so a lot of expenses here. What I do want to say is, don't feel like you need to write all of these down or remember all of these. Michael and Melanie will send a cheat sheet. I know we've done a lot of good stuff with Marie on this as well that you can dig into. One that is always a hot topic that I will end us on, I believe we're at 9:59, is personal psychotherapy. And so whether you're writing it off through your business or whether you're writing it off through your personal, through medical expenses, you should certainly take advantage of the sessions that you pay for. Personal psychotherapy, if you're writing it off through your business, look at it pretty closely to supervision. And so let's imagine that I'm paying Michael, the therapist, for support, and he is helping me grow as a clinician in my practice. What I talk about is predominantly clinical work that I do, so pretty closely with supervision. You would write it off through your business, and there's different approaches that you can take for that. If it is like for me, I deal with panic disorder and I go see an amazing therapist that helps me do all of the interceptive exposure work and all of that good stuff. If it is for medical purposes, then I would write that off if I were to itemize my taxes. And so if I weren't taking the standard deduction on my personal tax return and the expenses were enough, I might write it off that way. And so you can write it off either way, but just get a good sense of what the actual true business purpose is and if it's ordinary and necessary in your practice.
We are at the top of the hour here, so excuse me, want to be respectful of everyone's time. Thank you so much, Dr. Marie, for having us, Andrew, for this presentation. We will send out the slides. I know we covered a lot of information and went pretty quickly. So we'll send this out, send out the recording. Wanted to just throw this up here again. Scan this code if you do want to schedule a free call with the HERD team. Dr. Marie, anything before we jump off?
No, just thank you so much. I mean, I'm just looking at the chat and clearly I think it's all helpful and clearly everyone else thinks so as well. So thank you for covering so much information.
Of course, and thank you also for having Andrew on your channel. There's a few videos, if folks are interested in diving into some of these topics. You did a great interview with him last year, I believe, or maybe even 2 years ago. but you can
3?
find those on your
Yeah,
channel.
somewhere
Who
back there.
knows? They're all, yeah.
So
Great.
maybe.
Yeah. Hope everyone has an amazing Friday, an amazing weekend, and we will talk to you soon.
Thank you.
All right. Take care.
Take care.